Hi, I'm Tom Lydon, editor of ETF Trends here in Chicago at the Morningstar ETF Invest Conference. And I'm here with Andy Gogerty, who's ETF Managed Portfolio Strategist for Morningstar. Andy, thanks for being with us.
Thank you.
Listen, we were here a year ago having a similar discussion about the ETF strategist or ETF Managed Portfolio Group. It's exploded since then.
It has. The penetration has really continued, and you're seeing not only a deeper penetration in existing channels, such as advisors, independent broker-dealers, and RIAs, but you're also starting to see interest and a wake-up call from both wirehouse advisors, private wealth banks, and even smaller institutions.
So are there more strategists getting into the space? And as far as penetration getting deeper?
Penetration is getting deeper across the industry as a whole, but the industry is still very top heavy. 20 months ago when we put out our first landscape report, the top 15 firms controlled about 71% of assets. Today the top 15 firms control about 75%.
Wow.
So the concentration at the top is still there, but what's different is you're seeing smaller strategies, $50, $100 million strategies, that don't move the needle on an absolute basis for the space, but they're still growing at rates of 20, 30, 40% per year. It's just the absolute number is a little bit smaller because of the long tail in the space.
Got you. So you've got a whole bunch of different strategies, and again, for the average advisor out there, here's the premise. You might have started to adopt ETFs within your own portfolios for clients, but these strategists are offering a whole variety of different strategies that you can choose from that are available on your platforms. And at Morningstar, your team monitors the performance and categorizes these groups. Would you say that's it?
Yeah, we've come up with an attribute system that goes beyond the typical Morningstar style box categorization, which historically looked at holdings.
Yeah.
The ETF managed portfolio attributes give a go-forward look at the portfolio. What can it invest in? How wide-ranging around the globe will it go? And it's really meant to marry an advisor to understand not only where a portfolio has been, but where it can go. You know, you talk about the tactical nature of these strategies. Just because I haven't been in EM equity for the last 6 months doesn't mean I can't go there. And the ETF as a technology gives you a very efficient way to do that. So we came up with a second set of, labels and classifications to help advisors understand, okay, I like strategy A, who else does that, and where does it fit in the entire universe?
So are most of these advisors that are using these strategies, are they using them for core positions, or are they using them to enhance core positions that they've already established?
We're seeing a little bit of both. There's basically two ways that you could go about this. Many advisors are still building the core themselves, where they're selecting ETFs to build a core strategic allocation. And they're going out and getting a tactical manager or someone to diversify that core. That's option A. Part do it yourself, part do it for me. The second part are advisors that have said, listen, asset management is not in my wheelhouse. What I'm going to do is service current clients, and I'm going out and I'm going to gain assets and build my business. They're outsourcing the entire portfolio management function. Similar to if you go back to the growth of the mutual funds. You had stocks, you had mutual funds, and then some advisor said, I don't want to pick the funds, hence the birth of the mutual fund wrap. Right. You're seeing the same type of parallel evolution on the ETF side.
Kind of the Wild West, isn't it?
It is a Wild West in terms of people are used to long established track records, and a lot of these strategies haven't been around 10, 15 years like you've seen in the mutual fund space. One, for two reasons. The adoption of ETFs has been rapid, but still very slow in the context of global investing. Just as you couldn't have a mutual fund until you had a big enough stock market.
Yep.
Can't have an ETF managed portfolio until you had a broad array and depth of ETFs to which you could express a macroeconomic view.
Great. So, say you pull out your crystal ball. We're sitting here a year from now in the
Sure.
same seats. What does the space look like? What's the size look like? And where will be maybe the biggest opportunities in the next 12 months?
I think the biggest opportunities, although it's going to be very selective, wirehouses and off the beaten path capital. So things such as insurance companies who want to outsource their portfolios, credit unions, regional broker-dealers who don't have a very large asset management arm but want product. Those are the biggest sources of growth, along with traditional RIAs. They're looking for that fiduciary standard, that transparency in the portfolios. Going to your crystal ball about growth, I won't give you a number, but I'll give you a percentage. I think over time, managed portfolios could probably account for 10 to 15% of the size of the ETF market. To say of where ETFs are X, 10 to 15% of that is going to be run in a managed portfolio, I think is very pragmatic, and I think you're seeing that growth right now. First half of 2013, ETF assets only went up 7%. Managed portfolio assets went up 18%.
Wow.
So the growth is still there. Now we're talking over $1 trillion versus just 80 billion. But if you think long term, 10% of all the assets be controlled by an RIA or pursuant to a strategy seems pretty reasonable to me.
Great. Andy, thanks for your time. I appreciate it. And great conference.
Thank you very much.